So today we're going to quickly look at whether today's Australian CPI figures will derail the RBA's cut next month, and then we'll finish up on Australian dollar charts. And the first thing that jumped out is that trimmed bin inflation on a quarterly basis was above expectations at 0.7% versus 0.6% expected or 0.5% prior. There's a bit of a shame because some of the headlines should be touting the fact that annual trimmed bin inflation has dipped into the RBA's 2 to 3% band for the first time since Q4 2021. But I don't think that's going to completely derail the RBA cutting next month anyway, and here's why. As my trusty colleague David Scott pointed out, goods excluding volatile items was only 0.15% on the month, and services excluding volatile items was actually minus 0.15%. And these are the lowest levels since the pandemic. And these are the numbers that the RBA are more likely to be focused on. And if anything, that likely boosts the odds of an RBA cut next month. But if the RBA do cut in May, they're not likely to cut in June as well. And if they don't cut in May, they'll probably cut in June. So does it really matter at this stage? I think the biggest takeaway from this is that the underlying inflation themes here likely keep the odds of further cuts going out as we get to the back of the year, and we'll have more information from the Trump tariff. So overall, I think this is a bearish outcome for the Australian dollar, which is quite nice because it fits in with some of my technicals. I've got the Australian dollar daily chart here, and we've had a pretty solid bounce there from the 59-cent level. But as I've noticed for the past week or so, it's been pretty choppy trade around that 200-day exponential moving average. Now we've found resistance around the 50% retracement level, and there's also a potential double top though. In fact, if we zoom in and look at yesterday's candle, it's a bearish engulfing candle that closed back beneath the 200-day average and the 64 cents level. We've got a slight bearish divergence, and I like the fact we've got a slightly higher Aussie. Today's high has tested the 200-day exponential moving average once more. So really, I've got a bearish bias whilst prices remain beneath yesterday's high, and hopefully move down towards 63 cents. And it's a similar look on Aussie CAD. Again, we've got this pretty solid bounce. It has really struggled to maintain that momentum over the past week and a half. And I like the fact that it's struggling around the January high. It's retesting it today. And we've got this 50-day exponential moving average and the historical VPOC in this area, and it shows a bearish engulfing candle around that 89 cents level. So again, I think really I'm enjoying this pullback. And whilst prices remain beneath yesterday's high, looking for a move back to at least the April low, a break beneath which opens up a run for the February 2024 low, which is also near that Fibonacci level. As for pound against the Australian dollar, I've got this nice bullish trend on the daily chart. Prices have consolidated for the last couple of weeks, but we've seen prices now lifting for the second day from the 20-day average. As long as prices can hold above the 2020 high or that high volume node, hopefully prices can go higher for another leg, somewhere within this zone between 21.12 and 21.33. A similar setup on Euro Aussie. We've got a pretty decent bullish trend structure on there. We've also got this falling wedge, which is a bullish pattern in an uptrend. Now, I think over the near term, we could be looking for a move up to 1.08. I'm not getting too aggressive on this one, quite simply because if we look at what's happening on the monthly chart, this April candle is eerily similar to the one we saw at the 2020 top and also the 2008 top. In that we've seen over half the gains of the month have been handed back, and it's almost a bit of a spike top going on there. So near term I'm bullish on Euro Aussie. Further out I'm looking for a bit of a decent pullback, but we can discuss those in later videos. But as always, hope that's useful and wish you best of luck with your trading.